Here we have a demonstration problem that will basically take us through the entire accounting process from start to finish, with the exception of the first couple of steps, which is to analyze and journalize transactions and to post those transactions to the general ledger. We will assume that that process has already been done and pick this problem up basically at that point. The problem reads as follows. DK Golf Course Management provides the unadjusted trial balance as of December 31st, 2000X on the following tab. And the following adjusting entries are required, and we see 6 adjusting entries that need to be done here. More importantly, we see the worksheet here, which has our unadjusted trial balance. We have all the accounts that are valid accounts for this particular company listed in numerical order from our general ledger. We notice that those accounts that have balances to them are shown here, and we have our total debits of $130,900 and our total credits of $130,900, and we have all the information we need to complete the worksheet along with the information we have here for our adjusting entries. Our job is to update the general ledger account balances from the information worksheet, then to complete the worksheet using the data in the unadjusted trial balances and the above adjusting entry information, create financial statements, journalize and post the adjusting entries, journalize and post the closing entries, and to create a post-closing trial balance. Now this problem is quite lengthy, and we'll take some time to invest here to do it, but it'll be well worthwhile when we've actually done a problem where we start and do most of the entire accounting cycle start to finish. So a couple of notes here. Our first item that we have to do is to update the general ledger account balances from the information on the worksheet. Now, this is not something you would typically run across in the real world, but some textbooks present this as part of the problem where you've got to actually take this information and transfer it to your general ledger and update your account balances in your general ledger. I've already transferred the information, and I'll show you a couple of the entries here to see how they get transferred. You enter the date. In the item column, you enter balance, showing that this is a balance forward, perhaps from another general ledger book, starting a new book. Your posting reference is typically a check mark in a spreadsheet like this. I've used an X to indicate that. And my balance in my cash account was a $1,500 debit. And I found that here on the worksheet. Right here is a $1,500 debit. And I took these each account at a time. Accounts receivable, $3,000 debit. I go to my general ledger account for accounts receivable. Again, enter the information about the date, the balance, my posting reference, and the account balance. And I've done that for all these accounts. You can see in my general ledger, all my accounts that have balances from the trial balance are transferred here. If they were a debit in the unadjusted trial balance, they're a debit here. If they were a credit there, they are a credit here. We see wages payable had no balance, so there's no entry. My capital account balance, etc., etc. So I see I've updated my general ledger and accomplished the first task that I have in hand in order to complete this problem. So let's go back to the problem instructions and say the next job we have is to complete the worksheet. And in order to do that, we need this information up here for our adjusting entries. And so we will take them one at a time, and we'll go to our worksheet. The first one says supplies on hand December 31st are $400. And if we look at our worksheet, we look at our supplies account, we see that we have a balance of $1,400, and that adjusting entry is telling us that we only have $400 left, which means the amount that have been used is $1,000. And if I was going to journalize that transaction, I would debit supplies expense for $1,000, and I would credit my supplies account for $1,000. Now, as I noted in the lecture, if you're more comfortable journalizing these adjusting entries before you transfer them to the worksheet, that's quite all right. You can go right to the journal, and for purposes of this problem, I will simultaneously journalize the entries as I put them on the worksheet. So if we go here, we're going to call this page our adjusting entries, and this would be December 31st. and we had a debit to supplies expense of $1,000, and we had a credit to supplies for $1,000. And we'll post these later in the process. Back to our problem, our second adjusting entry is to insurance expired December 31st is $200. Well, the word expired means the amount that's been used up. It tells us the amount of the adjusting entry. If we go to our worksheet in our adjustments column, if I was going to journalize this entry, I would go to supplies expense as a debit, $200, and I would go to my prepaid insurance and credit $200, and I can show that in my general journal here, insurance expense, $200, prepaid insurance, $200. So I've basically accomplished the same thing in my real journal, which I'm going to have to do anyway, sometime enter these journal entries, and on the worksheet. My third adjusting entry is the depreciation on the trucks for the year is $1,500. And again, they're telling us the amount. And so I would have depreciation expense on my trucks, $1,500, and accumulated depreciation on my trucks credit, $1,500. And in my journal, I would record that transaction like this. Back to our next adjusted entry. Depreciation on the building for the year is $5,000. Again, my depreciation expense for the building, debit, $5,000. Accumulated depreciation on my building, credit, $5,000. And in my journal, I can record that. So I've accomplished the same thing either on the worksheet or in the journal. As we said many times, if you do it on the worksheet, you're eventually going to have to do it in the journal. But the worksheet allows us, if we just did it first there, allows us to get from the unadjusted trial balance through the adjustments to the adjusted trial balance and to creating financial statements in a very efficient and quick manner. Now our next adjustment is our wages that have accrued but not yet paid are $1,750. And again, these adjusting entries at this point in time should be very familiar to you. If you can't just read that and know what the debit and credit amount or accounts are, then you need to go back and practice your Module 3 adjusting entries a little bit more. But here we would do a debit to our wages expense, and let's go back. That was $1,750 is the amount. Wages expense debit, $1,750, and then we've created this liability wages payable as a credit, $1,750. And again, in my general journal, I would have wages expense and my liability. And then finally, here our last adjusting entry is services completed but not billed December 31st are $4,500. This is the same adjusting entry you always have, which is to debit accounts receivable and to credit fees earned or services revenue, whatever our revenue account happens to be. The amount is $4,500. Here's our accounts receivable, $4,500 debit. Here's our revenue account, fees earned, $4,500 credit. I'll go ahead and journalize this one as well. And now we've actually done a couple of the steps of the worksheet in one process here. So we've now completed step 2, which is, or I'm sorry, we've completed part of step 2, which is to transfer this adjusting information from here onto the worksheet, and we've recorded all of our adjustments here. Now we haven't finished this process because we have to foot our columns, and so if I add up all of my debits, I see they turn out to be $13,950. And if I add up my credit column, I see they turn out to be the same, $13,950. And so my adjustments turn out to be proper as far as debits and credits go. Our next step in completing the worksheet is then to transfer the information from the unadjusted trial balance, then through the adjustment columns, and then create our adjusted trial balance. And the way we do that is we take it one row at a time, and we see that we started in our cash unadjusted trial balance with a debit balance of $1,500. There were no adjusting entries. That means our adjusted trial balance for cash is a debit of $1,500. Now we move on to the next row, accounts receivable. We started with a $3,000 debit balance. We did an adjusting entry of $4,500 debit. Whenever we're moving through this process, if the unadjusted trial balance amount is a debit and the adjustment amount is also a debit, that means we add the two amounts. If they match, we add. If they're both debits, add. If they're both credits, add. If they don't match, if we have one debit and one credit, then we subtract. In this case, they both match. We're going to add. That makes the new balance in our adjusted trial balance a debit of $7,500. Here's our supplies account. We started out with a debit balance of $1,400, and here they don't match. We had an adjusting entry of a credit for $1,000, so that means subtract, and the larger one always wins. The larger one here is a debit, so $1,400 minus $1,000 makes it a debit of $400 is the new balance in our adjusted trial balance. If we move on to our prepaid insurance, we started with a $3,500 debit balance and we had a credit entry. That means subtract. The bigger one wins. We have a $3,300 debit balance in our prepaid insurance account after our adjustments. Now our trucks, there was no adjustments. We still have $25,000 there. Our accumulated depreciation on our trucks, we started with a $5,000 credit balance. We had a $1,500 credit entry. We add, that means our new balance is $6,500 credit. The building, there was no change, still $50,000. Our accumulated depreciation in our building, we did have a credit and a credit, so we add. We now have a $30,000 credit balance in that account. Our accounts payable, there was no adjusting entry. Okay, we still have a credit balance of $1,700. In our wages payable, we did not have a balance to start with. We had an adjustment of $1,750, which was a credit. That makes our new balance $1,750. Now, just a little note here. You will find some textbook problems that if there was no balance in the account, it will not appear in the adjusted trial balance that we originally started with here. Now, I've included all of our accounts that needed entries, but if it's not included, it's perfectly fine to go down here at the bottom and add the account that you need to add. Okay, so we would have typed in wages payable here, and we would have done a $1,750 credit here, and then we would have transferred the balance here. And so we start tracking additional accounts below this initial line here, and that's perfectly fine. You just need to be careful when transferring information to the income statement and the balance sheet that you don't forget about the accounts down here below, and then you've got to determine what class they are, either income statement or balance sheet, the type of the account, and where it needs to be transferred to. Now let's get back to transferring this information. Here's our capital account. There was no adjusting entry. We still have $34,200 here. The drawing account, no adjusting entry, still $5,000 there. Our fees earned, we did have an adjustment. We started with $65,000. We add another $4,500. That's going to give us $69,500 as a credit balance. Our wages expense, we had another entry here. We had a $35,000 debit, $1,750 debit. That means add. Our new balance is going to be $36,750 debit. Utilities expense, no entries, so it's the same. And our depreciation expense on our buildings and our trucks and our supplies and insurance, there were no entries there before. We had some adjusting entries here, so zero balances before just means the adjusting entry is the new balance. And so $5,000 here, $1,500 here, $1,000 here, and $200 here. And then finally, our truck expense, there was no adjusting entry. We had $500 and $1,000 in miscellaneous expenses. Next step is then, again, foot our columns. Our total of debits is $143,650. And our total credits, again, $143,650. Now, the next step in completing the worksheet is to transfer the information from the adjusted trial balance either into the proper income statement column or balance sheet columns. Now, since we have all of our accounts listed here and we didn't have to add any accounts at the bottom, it's very easy for us. We just draw a line right here at the drawing account, and everything below that are income statement accounts. There's our revenue and expense accounts, and everything above it, including the drawing, goes to the balance sheet column. So, if we start here again, let's draw that line again so we can see it. We need to transfer our revenue and our expense numbers from the adjusted trial balance here and then get them into the income statement here. And with a spreadsheet, that's pretty easy. I can just copy and paste the information. And so we've now got our revenue and our expense accounts over here in the income statement columns. Now, while we're here, what we have to do is we have to add up our credits and add up our debits. And our total debits here are $50,950. And our total credits is easy. That's just one account, $69,500. And if we look at this, our credit column represents all of our revenue. That makes sense. Our revenue accounts have a normal balance of credit. And so our revenue is $69,500. Our income statement equation is revenue minus expenses will give us net income. Our total expenses are $50,950. And so our net income, we're going to type in over here, is simply this cell right here equal to our revenue minus our expenses. Our net income for this company for the year is $18,550. And then to finish out the income statement columns, we want our bottom line numbers to have debits equal to credits. And to do that, we simply say this is equal to our expenses plus our net income, which is $69,500. And this cell here is simply equal to our revenue, $69,500. Then the last step in our process is to transfer our, again, our balance sheet information to the balance sheet columns. And we draw our line there at the drawing account. And all this information here gets transferred over to our balance sheet columns. And again, I'm going to do it simply by cutting and pasting. And we've got transferred now all of our assets right here, our contra asset accounts here, our liability accounts and our capital account, and our drawing account. Now, if we total up our debit column there, we get $92,700. And if we total up our credit column, we get $74,150. Whoops. We see here that our debits, again, do not equal our credits, and the reason for that is we've not included our net income in our balance sheet. And if you think about our income, or our financial statements rather, we have our income statement, and from there we take net income to our capital account, and our ending capital number then goes to our balance sheet. So in order to make our balance sheet columns balance here, we've got to also incorporate net income. Right here's our net income number. And the rule is if it was a debit in the income statement column, it becomes a credit in the balance sheet column. So I'm going to put $18,550 here. And then if we total up our net income and our credits in the balance sheet, we find that it equals our debit balance in our balance sheet. And we've now completed our worksheet. Now, let's go back to the problem and see what our next task is. Our next task is to create financial statements from the worksheet. So the only reason that we do the worksheet is to make this process easier, is to get from our unadjusted trial balance to creating financial statements as quickly as possible. So you see here, I've created some templates for our financial statements to save on time. We've got our income statement here, and we've got our fees earned, and I've listed all of our expense accounts already. I've got my statement of owner's equity and my beginning capital plus my net income less my withdrawals and my ending capital. And I've got my balance sheet here, and I've already listed all my assets and my liabilities and my owner's equity. So what I need to do is get the information from here on the worksheet. In the income statement column, the highlighted area there is all the information I need. Here's my revenue. Here's each of my expenses with the associated expense account listed over here. Here's my total expenses. Here's my net income. I don't even have to do math to create my financial statements. It's all here. So from the worksheet, I see my fees earned is $69,500. So I'm going to type in here $69,500. And then I need my individual expenses. If I go to my worksheet, I could flip back and forth and copy all that information, or I could just copy and paste from here on financial statements. And I would see that I've populated here my wages expense, utilities expense, depreciation expense on my building, depreciation expense on my trucks, my supplies, insurance, etc., etc. My total expenses are already shown here. I just have to move it to the proper column here. So I'm going to cut that and paste it over here. And then let's clean this up a little bit. So now all I have to do then is take my total revenue less my total expenses, and that'll give me my net income. And I don't have to even do math here. I go to the worksheet. Right here's my net income number, $18,550. And so I finish that. Whoops, $18,550 net income. And I've created my income statement, and all the information I needed was right there on my worksheet. Now, the next financial statement we have to create is my statement of owner's equity. And there's a couple of numbers we need from our worksheet, and that is the capital number, which is our beginning capital, and our withdrawals by our owner. So our beginning capital is $34,200, and our owner withdrawals are $5,000. And if I go over here to my financial statements, I can populate those numbers. $34,200. My withdrawals were $5,000. And my net income is right here, $18,550. Now, this is the first time in creating financial statements that I have to actually do a little bit of math, and I need my net increase to capital, and that is simply my net income less my withdrawals. So I'm going to go out here and I'm going to say this is equal to this minus my withdrawals. And so my net increase to capital is $13,550, making my ending capital simply my beginning capital plus the increases to capital. And my ending capital is $47,750. And I've created my statement of owner's equity. The information I needed was found here on my worksheet. along with my income statement, and between those two I was able to create that. Now finally, my balance sheet. Now I've created what's called a classified balance sheet here. It's classified because I break my assets into current assets, and then my property, plant, and equipment, which is my capital investments, my long-term assets which depreciate over time, including land, which never depreciates. So those are the things that go under property, plant, and equipment. So what I need to do here is transfer my cash balance from my worksheet, and it's $1,500. Let's get accounts receivable while we're here, and supplies, $1,500, $7,500, and $400. Then I need my prepaid insurance, and it is, the balance in that is $3,300. So let's put that on there. My total current assets, if I add these up, I get $12,700. Now, under property, plant, and equipment, again, everything I need is on my worksheet. Here's my trucks. They are $25,000 is the balance. $6,500 is the accumulated depreciation that goes along with those trucks. So $25,000 and $6,500. So that goes $25,000 and $6,500. And remember, when we do a classified balance sheet, the book value of my trucks is the value of my trucks, the original purchase, less the accumulated depreciation. So this is equal to my truck's original value minus the accumulated depreciation. Book value in my trucks, $18,500. My building, the value on my building is right here. It's $50,000. The depreciation is now $30,000. And I think even I can do that math in my head. So we have $50,000 here and accumulated depreciation of $30,000. That makes the book value of our building $20,000. Our total property, plant, and equipment is the book value of our two assets here, which is $20,000 for the building and $18,500, or $38,500 total property, plant, and equipment. And my total assets is equal to my total current assets plus my total property, plant, and equipment. My total assets, $51,200. When we move over to the liability side, again, it's a classified balance sheet. We only have current liabilities. If we had long-term liabilities, we would have a classification for current liabilities and list all them. Then we would have long-term liabilities, list all them, and then we would have total liabilities out here. So let's go find our accounts payable balance on our worksheet. It's right here, accounts payable, $1,700, and while we're here, our wages payable is $1,750. So let's go get those, and $1,700 here, $1,750 here. Our total liabilities added up is $3,450 rather. Our owner's equity, this is the only number, our ending capital number does not come from the worksheet. This number comes from our statement of owner's equity. Over here, it's $47,750. So we need to go in here and put $47,750. And our total liabilities and owner's equity is equal to our liabilities plus our ending capital, and it's $51,200. We see that our balance sheet balances, our total assets, equal our total liabilities plus owner's equity. And so we've now completed step 3 of our instructions, which is to create financial statements from the worksheet. And really the reason for doing the worksheet is to get to this point very quickly and efficiently. But we're not done with the problem. We still need to journalize and post our adjusting entries. Well, luckily for us, we have already journalized our adjusting entries. We did that when we were working on the worksheet. But let's go ahead and post this information. So what we need to do is go to our supplies expense, and we need to post that information of $1,000 debit. So I'm going to go find my general ledger, Go down here to my supplies expense, which is right here. The date is December 31. This is an adjusting entry. So in our item column, we note is an adjusting entry. The posting reference, this came from our general journal on page 44 right here. So our posting reference is page 44. This was a debit of $1,000. There was no balance in the supplies expense account before, so our new balance is $1,000. And this is account number 55. So I need to go back into my journal, and in my posting reference I put 55. Now I need to go to my general ledger and my supplies account and post a credit for $1,000. So up here in my supplies account, December 31st, an adjusting entry, page 44 of my journal, credit for $1,000. That makes my new balance a debit of $400. I had a debit of $1,400 before. I did a credit of $1,000. They don't match, so we need to subtract, and the bigger one wins, which is the debit, $400. That's account number 13. So back in my general journal, I put a 13 in the posting reference column, and then I continue the process of posting all these accounts into my general ledger. And at this point in time, you should be very familiar with the posting process. So I'm going to pause the recording for right now, complete this process, and when we return, we'll start talking about the closing entries. Okay, we're back. We finished the posting process, and let's go back and review. Back here is our adjusting entries. We see that all of them have been posted. I know that because of the posting references being filled in here. And if we look at our general ledger accounts and review them, we see here we had the adjusting entry to accounts receivable, noted as adjusting. Here's our supplies adjusting entry. We've updated the balances. So each place we see an adjusting entry, we have new balances in those accounts. And we'll just scroll through here briefly. You can see that all the ones that were affected have been updated with their new balances after the adjusting process. So now we go on to our next problem, which is to journalize and post the closing entries. And we know from our lecture on closing entries that they're necessary because we need to close out our revenue and expense accounts as well as our drawing account. Those are the three temporary accounts that or categories of temporary accounts that we have. And the reason we do that is that we want those numbers to be zero when we start our next financial period, so we can accurately report what was the revenue and expenses and the amount of drawing that the owner had in that financial period. We don't want to muddy the waters for next year with this year's revenue numbers. So in order to do that, we need to close out those accounts. And so we can journalize them. I've created a new journal page here for our closing entries. Again, the date is December 31st for all these. And we know that the steps in our closing process are, step one is to zero out the revenue accounts. And if we go to our general ledger and we find our revenue account, fees earned here, we see we have a credit balance of $69,500. And in order to make that balance zero, we're going to need a debit of $69,500. And so in our journal, we're going to debit fees earned, $69,500. And we need a credit that goes along with that. And we learned in our lecture that we've created this new account called the income summary account, which we use to aid us in the closing process. And that's where our credit goes to, $69,500. So that's step one. We've zeroed out our revenue accounts, and once we post this information into our general ledger accounts, this will be a zero. So let's go ahead and do that. In our general ledger, we need to enter a debit in our fees earned. This is December 31st. This is a closing entry, and it came from page 45 of our journal, and we're going to debit $69,500. That makes our new balance zero. And so we can put a dashed line or a zero to indicate that, and we do that in the normal balance column. In our case, Normal balance for revenue account, in not only our case, all cases, is 0. So we're going to indicate that there. We're going to do our posting reference back in our journal, page 41, to show we went ahead and posted that information. Let's go ahead and update our income summary. Now, normally I'd wait and post all these after the closing process, but I want to show how the account balance, particularly for income summary, changes throughout this process. So I'm going to go ahead and do this posting now. I need to put a credit of $69,500 in my income summary account. It's right here. The date is December 31st. This is a closing item. And this came from page 45. And I'm going to credit $69,500. That makes my new balance $69,500. And that's account number 33. So back in my journal, I'm going to put in the 33. Now, the next step in the closing process is to zero out the expense accounts. And so we can use our worksheet to help us out here. We have these expense accounts: wages, utilities, depreciation, supplies, insurance, truck, and miscellaneous. And I'm just going to take them and copy them over here into our journal so that we've got them already recorded there and we don't have to flip back and forth. And remember, these are all now debit balances. If we look in our general ledger at our wages account, our wages expense rather, we have a debit balance of $36,750, and we have a utilities expense debit of $5,000. So in order to make these account balances go to 0, we need some credit entries for the same amount. So again, our worksheet can help us out there. Here are the amounts that we need to credit right here. Right here in our income statement column. I'm going to copy those, and over here in our journal we're going to enter those as credit amounts. Okay, and if we added up all of our expenses, again, the worksheet can help us out here. Our total expenses are $50,950. So we need a debit with a total of $50,950 in it. So I'm going to go here, $50,950, and again we use that income summary account to do that. Now, to be proper here, we're going to need to indent these to show them as credits, but this will still save us some time. And now we've completed our journal entry. We have a credit entry to each of our expense accounts, and we have a debit entry to income summary. Now again, we want to go post this information so that we can see the effect of the income summary account. And so this is a debit. I'm going to go to income summary, and I'm going to debit $50,950. So my general ledger, we're already right here to income summary. This is another closing entry. It's from same page 45. This time it's a debit, and the amount, just to check, is $50,950. And so the new balance in our income summary account is going to be a credit, $69,500, which represents our total revenue, minus $50,950, which represents our total expenses, and that number should be our net income, which is $18,550. So our income summary account, the balance after we've closed out our revenue and expense accounts, represents our net income, $18,550, from right here. All right, so back to our general ledger. This is account number 33, and in our journal, to show that it's posted, that's account number 33. And we'll quickly post these entries into our wages expense. $36,750, credit. This is a closing entry. Came from page 45, credit, $36,750. That makes our new balance. We had a debit of $36,750, balance before with a credit entry of $36,750. That makes our new balance in our expense account 0. Go ahead and put the date in here. And here we see an account where we have 3 different entries, and we've used the item column for 3 different reasons, the 3 reasons we use them for: a balance forward, an adjusting entry, and a closing entry. Now we'll go back and now post this posting reference. This is account number 51. We go on to utilities and do a $5,000 posting. The nice thing about this closing process is the accounts are in numerical order, so it makes it pretty easy to find them. 45, a credit of 5,000. That makes our new balance 0. This is account number 52. So we put a 52 there. We move on to depreciation expense for our building. Depreciation expense for our trucks, $1,500. Making our balance there 0 as well. Supplies expense. Zero out that account. Insurance expense, $200. Makes that balance 0. And we have 2 more expense accounts to zero out. Go back here, 56. Truck expense, $500. Makes that 0. And then finally miscellaneous expense for $1,000. And we've completed step 2 of the closing process, which is to zero out our expense accounts. Now, step 3 of the closing process is, I like to state it as to zero out the income summary account. Some textbooks say is to transfer the net income to the capital account, and really that's what we are achieving in this whole process. But if we simply say zero out the income summary account, and we go look at the income summary account, we see that it has a balance of credit of $18,550, which represents our net income. And if we're going to zero it out, we need a debit to that account, income summary, for $18,550. So, if we look here, income summary, debit $18,550. Our credit is to our capital account. And that makes sense because net income adds to our capital account. Our capital account is increased with a credit entry. And so we have, in essence, transferred the net income into the capital account through this particular process. Now, if I go on and post this information, I'm going to debit income summary for $18,550. And so here I am, closing entry again from page 45. I'm going to debit this time $18,550, and our income summary account is back to 0. Just after 3 journal entries, we're done with the income summary account. It goes away till next time we need it in the closing process. So it's a short-lived account. It's also a temporary account. So let's go put our posting reference of 33 in here. We're going to post this to our capital account, a credit of $18,550. So in our general ledger, we'll find our capital account on December 31st. Closing entry from page 45. We're going to credit $18,550. That makes the balance in our account Let's do it the easy way here. That's the wrong formula. Here we go. Makes our balance $52,750 in our capital account. Now, we post that information. That's account number 31. And the final and fourth step of our closing process is to zero out the drawing account. Now, we know our drawing account has a debit balance. It's right here. We have a debit balance of $5,000, and in order to make it zero, we need a credit entry of $5,000 to our drawing account. And the debit that goes along with that is to our capital account. And that makes sense because a debit would reduce our capital account, and we know that the drawing, or with the withdrawal from our statement of owner's equity, subtracts from our capital account. And so if we go here to our journal entries, we're going to debit Don Kraus capital for the $5,000, and we're going to credit Don Kraus drawing for the $5,000. And if we go ahead and post that, our capital account, it's a closing entry. It's a debit of $5,000. That makes the new balance in our capital account, $52,750 minus $5,000 is $47,750. And now just a note, if we go look at our financial statement, our statement of owner's equity, we see our ending capital balance is $47,750, and now our general ledger reflects that same balance. That's what we were trying to do in this closing process, is get all the accounts up to date, and we have achieved that for our capital account. Back here, this is account number 31 again, and we finally got to post to our drawing account a credit of $5,000, and here on December 31, it's a closing entry on page 45, a credit of $5,000. That makes the new balance in our drawing account $5,000, and then we go to our journal and put our posting reference, and we've now completed the fifth item in our problem, which is to journalize and post the closing entries. Our last one is very simple: create a post-closing trial balance. It's just like the other trial balances we've done. It's a matter of when we do it, and we do it after the closing process. You'll see here I've created a template. I've got the heading in here, and notice that we only have temporary accounts left to populate our post-closing trial balance, because all of our temporary accounts have been zeroed out. So we have balances in our asset accounts, in our liability accounts, and in our capital account. And if we just go to the general ledger and we pull out these balances from each of these accounts, at the end of the process, $1,500 in cash, $7,500 in accounts receivable. Our supplies balance from our general ledger is $400 and $3,300 for prepaid insurance. Our trucks, there was never a change there, and it is still $25,000, and our building is still $50,000. So $25,000, $50,000. Our accumulated depreciation in each of those accounts for our trucks, it is $6,500. For our buildings, it's $30,000. Accounts payable in our general ledger, $1,700. Wages payable, $1,750. And then finally, our capital account ending balance. When we look at our general ledger, it's right here, $47,750. And so when we total up our debits, we get $87,700. And when we total up our credits, we get $87,700. And that completes the problem at hand. Go back and make sure we've completed all of the tiles. The worksheet, the financial statements, our journalizing of adjusting entries, journalizing of posting entries. Our general ledger's been completely updated. We have balances in all those accounts after the closing process. See them here. And then finally our post-closing trial balance. This should give you all the information you need to complete all of your homework problems, and I hope this has been beneficial.